When it comes to planning for retirement, most people think of the typical stock and bond portfolio. But if you're a retiree or getting close to it, you might be wondering if there's a better way to diversify your wealth and protect your future. One often overlooked strategy is using real estate as part of your retirement diversification plan. Real estate offers unique advantages, but you need to understand the risks and rewards before jumping in. Real estate is tangible, which gives it an inherent appeal. It's something you can physically see, touch, and even rent out. Unlike stocks or bonds, which can be volatile, real estate can provide steady income through rental properties or appreciation over time. Plus, it's less susceptible to market swings. But how do you use real estate effectively as part of your retirement strategy? First off, let's talk about the most popular way retirees use real estate in their retirement planning: rental properties. Many retirees buy single-family homes or multifamily units to generate passive income. The rental income can supplement your existing retirement income, and over time, as rents increase, so does your cash flow. It's a great way to keep money coming in without having to dip into your savings or touch your investment accounts. However, there's work involved: maintenance, dealing with tenants, property taxes, and this is where many retirees find they need more guidance. Now, when we compare real estate with something like a gold IRA, where physical gold is held in an IRS-approved account, real estate can offer great benefits, but a gold IRA might be the better option for many retirees. With a gold IRA, you don't have to deal with tenants or property management. It's secure, and as you'll see, it can hold its value even during economic downturns. If you're serious about protecting your wealth, I highly recommend checking out the free Gold IRA guide in the description below. Thousands of Americans are already protecting their wealth with gold IRAs, and you can learn why it's the top choice for retirees. Back to real estate. Another option is real estate investment trusts, or REITs. These are companies that own and manage income-producing properties, and they allow you to invest in real estate without owning physical property. REITs can offer good returns, but just like with stocks, they carry risks. Plus, many REITs don't offer the same protection against inflation or economic uncertainty that physical gold in a gold IRA provides. If you're looking for something that's relatively low maintenance, investing in real estate funds could be a smart move. These funds pool money from multiple investors to buy commercial properties. They often come with a lower entry cost and offer the potential for diversification across multiple properties, which reduces risk. But again, while these funds can be an attractive option for retirees, they still don't offer the kind of security and value preservation that a gold IRA can, especially in a turbulent market. If you're thinking about adding real estate into your retirement mix, you also need to consider the tax benefits. For example, rental income is taxed at your regular income rate, but there are tax strategies like depreciation that can help reduce what you owe to the IRS. Of course, tax laws change, and that's where working with a financial expert can really pay off. Now, here's where it gets interesting. If you've been paying attention to current trends, you'll know that real estate markets can fluctuate. When the market drops, your property might lose value, which is a risk you won't find with a gold IRA. Real estate might have long-term growth potential, but in the short term, it can be vulnerable to economic shifts. Gold, on the other hand, often increases in value when other markets dip, which is why many retirees are turning to it as part of their diversification strategy. I'd encourage you to check out the free Gold IRA guide in the description if you're serious about protecting your wealth and diversifying your assets in the next couple of weeks. If you have $100,000 or more in an IRA or 401k, or even $5 million in savings, this guide could be the key to keeping your retirement safe. Thousands of Americans are opening gold IRAs right now, and you should definitely take advantage of this free resource. At the end of the day, real estate can play an important role in your retirement, but if you're looking for something more secure, more flexible, and easier to manage, I highly recommend considering a gold IRA. Whether you own a rental property or invest in REITs, having physical gold in an IRA can help you diversify in a way that protects your wealth from volatility, inflation, and market downturns. So if you're ready to make sure your retirement is protected and your wealth stays secure, don't wait. Click the link for the free Gold IRA guide. Protecting your wealth has never been more important, and this guide is perfect for anyone with over $100,000 in savings or $5 million or more. Get started today and safeguard your future with the right retirement strategy.